To be successful in the stock market, you need to plan. And most people or most retail traders don't plan, and almost every professional trader does have a plan. On the early morning, I always start with monthly, look at what the monthly picture is, then go to weekly, daily, and then go into the nitty gritty details. This will help you to just get the perspective clearly. There's whether it's long, short. I mean, what is the market doing overall, and then go from there. See, this is the monthly chart of ES. It could just be SPY. I just put SPY or ES because that is the Standard and Poor's, which is considered as the market. You can use Dow, Nasdaq, and everything, but ES is probably one of the most reliable ones and most widely sold futures in the world. So I just go to monthly. This is weekly. I'm just going. Let me go back to monthly. So here you have 10-year monthly, and if you notice it, this is 200 day, 50 days, and 20 days, 20 months, so 20 periods of 200 months, 50 months, and 20 months. And if you notice it, it has been, this is after the Trump victory, pretty much it has been going one time framing all along. And now if you notice it, for the past couple of months it has fallen off, and today is May 31st, and it looks like it is again going back, but at a high level it is just stabilizing, and it looks like it might have started going back. The reason being, although it is within this time frame, I'm just mousing over and to see here what is the numbers. If you look at it, it opened at 2640, and today it is 2725, and the low was 2591, and what is it now? The high was 2741. Quite a bit of move, so it looks like it is stabilized, but it has a slow upward bias. We get to the weekly, 10-year weekly. This is weekly chart. This weekly chart gives a very clear picture. If you notice it, it is within, boxed within a range. In fact, the blue lines that I put there, just I put it earlier, is just to show that we are within a range. And so that was basically here, and then we are straight in the middle of the range, not upwards or downwards. Basically there was a poking down and then went up, there's a poking up and went down. So it's now 1 2 3 4 5 6 7 8 9 10 11 12 13 14 15 16 17 weeks of consolidation. It has not been breaking down, nor it is not able to get up and break this cycle. So just to get up, what I do is generally I also put an alert here. So create alert at or above. It doesn't have to be exact. Weekly high broken. So it will create an alert, and here I'm going to have another one which says create alert single weekly low broken. So at least I know that it is getting out of the range. So this is from the weekly perspective. Now let me go to the daily. Daily also, like it's not giving any clear directions as to which side it is going. So basically it is smacked in the middle, and I want to just add Bollinger Bands to see where we are. Just to recap, if you want to add any studies, just do edit studies and go to Bollinger Bands. If you look at it from the Bollinger Band, it's on the middle, so it could go either way. And so right now there's no direction in the market. So this is from the daily perspective. So the monkey bars has been like a complete mess, in the sense it had a big drop the day before and then a big up move yesterday with very little volume to support. See, this is 20-day 1 hour chart, and it was here. So I'm ignoring all those poor highs here that are all taken out yesterday. We still have multiple poor highs to be taken care of up to about 2740. but that doesn't help us to say that if it's going to go clearly up, because there's a lot of poor lows also, and there are quite a few of them even below that I could not show in this chart. So basically right now the market is having no direction, and it is trying to go up because it is, but it's not being able to do so. So that concludes our planning session, the morning routine. I did not go through the evening because I'm a little late, and the market has already opened. And if you see, the market is stuck in the middle with no direction, and we'll evaluate that in a separate chapter.